A very good afternoon. On to your markets news now. Asian stocks mostly declined today following the weak showing on Wall Street yesterday. Political uncertainty was a driver for Japan, where the future of Prime Minister Shigeru Ishiba is said to be uncertain following his party's recent election defeat. Big tech was also singled out as a drag on indices after having had a good run for some time, with concerns that they may be overvalued. The Nikkei share average closed 0.88% in the red. The Hang Seng Index lost 0.6%, while the Shanghai Composite Index declined by 1.16%. US stocks ended the session firmly in the red yesterday, dragged down by renewed concerns over overvalued tech stocks and a worrying debt outlook for the United States, especially as the Trump administration's tariff policy was deemed to be illegal by a court last week. The Dow Jones Industrial Average declined by 0.55%. The S&P 500 lost 0.7%, while the Nasdaq Composite Index closed down 0.82%. Looking at local indicators, we see that the all-share index is currently trading up 0.4% at 101,546 index points. The rand is trading at 17.63 against the US dollar, 20.54 vis-a-vis the euro, and 23.63 against the British pound. Gold is trading at $3,535 an ounce. Platinum at $1,401 an ounce, while Brent crude oil is trading at $67.86 a barrel. All right, let's get into it with Victor Siane. He's a portfolio manager at Benguela Global Fund Managers. Thanks very much for joining us, Victor. So market players appear to be a little bit subdued, some talking about concerns around US debt. Why now, given the fact that that's been an ongoing story for a while now?
Hi, Nompu. Thank you for having me. Yes, a couple of recent developments in addition to the factors that have been driving the debt concerns up to this point. We know about the court invalidating Donald Trump's tariffs, or parts of them, and that has now led to renewed fears about government revenue. And so that complicates the projections for the government fiscal deficits and the US's ability to pay down its debt. The other factor is the fact that the debt ceiling was reinstated earlier this year, and the US is getting close to the point where they are at risk of a technical default. So if emergency measures are not implemented, that may in fact happen. So those are some of the factors that are driving the current fears around debt. Also, in the past week, Treasury bonds of about $700 billion in the span of 2 days, and that again has stoked investor anxiety with regards to the extent of debt that the government is going to take on. And then lastly, the big beautiful bill, the tax and spending measures, that has led to projections of US debt increasing by between $2 and $5 trillion over the next decade, which will further increase the US's already high debt pile.
Mind-blowing stuff. So gold seemingly reflecting some of these concerns that you're talking about, hitting an all-time high during today. It's at $3,535 at the moment. That's quite impressive, and I guess there's a lot more room for gold to continue shining.
Yes, what we have been seeing is that so at this point, markets are pricing in a 92% probability of a Fed rate cut this month. And as we get closer to that date, we know that lower interest rates are positive for gold, because that means the opportunity cost of holding gold is lower because of bonds having lower yields. And we know that gold is a non-yielding asset, so that makes gold more attractive. The ongoing geopolitical uncertainties, that further contributes to gold. And then we've seen that central banks, particularly in emerging markets, have continued to accumulate gold. We've seen that inflows into the gold-backed ETFs have been sustained over the past number of weeks.
So Woolworths, they came out with their results, their annual results for the 52 weeks ended the 29th of June 2025. The report turnover up 3.9% at 79.5 billion rand, while adjusted headline earnings per share were down 19%. Shareholders are going to get a gross dividend of R1.88. They don't seem to have had the best time, but their food segment still continues to show some momentum. Just your comments on the Woolies results.
Yes, the food business is the crown jewel in the entire portfolio that Woolworths has. We saw revenue there for food alone growing about 9%. When you add in the Absolute Pets acquisition that they made, revenue was up 11%. Very good performance on gross profit margins. We saw a 20 basis point increase in their profit margins. So those two points are really the positive data points in the entire Woolworths set of results. Unfortunately, in all other respects, it was a very challenged result from clothing in South Africa and in Australia. And within food, while they grew their revenue by 11% and their gross profit by about 13%, unfortunately, their expenses grew faster than their gross profit. Expenses were up by 14%, and as a result, lower operating margins and a 7% increase in their operating income. Yeah.
I saw from the comments, the write-up that they did, they made a comment specifically around the consumer. Most of their consumers tend to be your more well-heeled consumer. What is the state of that segment?
Yeah, its best consumer is in its foods business. If you were to dissect the consumer into three buckets between the high, middle, and low income, you'll see that the highest income consumer is faring best with regards to their consumer confidence. After a dip late last year, the high income and middle income consumers' confidence has increased, in part because of lower interest rates, which impact them more. And they're a lot more affected also by two-pot withdrawals. In contrast, the low-income consumer does not benefit as much from interest rate decreases, fuel price decreases, and the two-pot system. And we've seen the low-income consumer struggle a whole lot more. That is reflected in the results of a company like ShopRite, where you saw that their ShopRite chain's sales only grew by 6%, but their Checkers chain, which caters to a high-income group, grew by 14%.
All right. Thank you so much, Victor, for your time and insights. As always, that was Victor Siani. He's a portfolio manager at Benguela Global Fund Managers.